Welcome to the Market Huddle Plus, episode 25. I'm Patrick Ceresna. This is our weekly 30-minute catch-up interviews with past guests. This week, we welcome back Boris Schlossberg, Managing Director at BKForex, to chat about the markets. Now, let's get Boris on the call. Hey, Boris, great to have you back.
Great to be back, Patrick, especially on Market Huddle Plus.
There you go. So listeners, if you want to hear Boris's backstory, you can go back to the Market Huddle episodes number 64 and 190. They're pretty good. But now, Boris, I was laughing at the title of
young children.
Yeah, I was laughing at the title of the first episode we did back in 2020 that was titled "Always Correct but Always Early," and I was immediately thinking that as a listener of the show, you clearly are impacted from the side effects of too much market huddle, suffering from premature accumulation. Have you been able to over the years remedy the side effect yet?
Alas, very little. You don't know how badly I suffer from that malady. It gets worse with age, yes.
All right. So listen, I love talking charts with you. So I threw up some charts here. Let's talk the markets. 700 S&P points basically in 2 months. What do you make of this market move that we saw since November? And what's next for the first quarter of the year?
Well, last time I was on the show, I was uber bullish. And of course, everybody called me an idiot. So let's just keep the trend going, because now I think I'm going to be uber bearish. I think that the market is in much greater danger than everybody thinks at this point. There's a tremendous amount of complacency. The rally was great, but I think the party is kind of over for a whole bunch of reasons. There is just a lot of problems on the horizon that I think people are underappreciating, both from a geopolitical point of view and from a demand point of view. But, ultimately, I think the real problem here is Jeff Gundlach did a webinar like a week and a half ago, and I thought he's made an incredibly interesting point that the single most important point from macro is not growth, is not this, is not that, it's not oil. It's the size of the interest rate service relative to the federal budget. It's been at around 15%. It's inching towards 16%. But when we were in trouble, like in the early 80s and 70s, that's when it hit in the 17 to like 19% range. And if we get into that zone, and he thinks it's going to go to like 20% of the budget, just think about it. One out of every $5 is wasted on interest, right? Mm-hmm. If we're in that position, it's very, very difficult to imagine the economy doing as well as it's done before. A lot of this economy in the U.S. Right now has been propped by a lot of infrastructure spend. And if we're in a situation where we're servicing debt at a 1 to 5 rate, a lot of those infrastructure spend projects are going to have to be put on mothballs. So I just, I find myself in a unusual situation of being much more cautious than usual. So I think we're topping out.
So what's interesting, okay, so you say topping out, and I in principle actually agree with you. I mean, that's something Kevin and I talked about in the last episode. But do you, what weight do you put to the idea that the market can still make higher highs and punch 5,000? Like, are you already thinking that this is the beginning of the rollover? And even better, what technical things are you looking for, like a divergent breadth, or what is it that you're looking for that kind of really is giving you the signal that the sell cycle has actually begun?
I think, I'm looking much less at technical. I generally think the turns, Jason Shapiro, who you guys have on the show, is just a great guy at calling tops and bottoms. I think Jason's methodology is probably the best I've heard, which is you look at fundamental catalysts that don't resonate, right? Failure of some upside, event pushing us higher, or even, a surprise negative event, something that people just completely blindsides the market. Unemployment starting to skyrocket, CPI starting to really press up higher. One of the things I think from a macro point of view, also underappreciated, geopolitical risk. I know everybody talks about how it's immaterial because everybody's totally been lulled to death by the fact that Israel went to Gaza and nothing happened in oil. But I feel like that story is not ending. It's actually just beginning. If you're looking at what's happening right now on the headlines, with the Houthis now threatening U.S. shipping and British shipping in the Red Sea, I just can't see that story kind of dying out a natural death. I mean, there's going to be a time. I mean, I'm actually starting to. I think it's actually going to also impact politics because Biden is starting to look like Jimmy Carter. It's unbelievable at how much I think geopolitical bad will this has generated in terms of like you have this tiny little country that's literally is fighting with swords, is threatening 12% of the world's traffic without any repercussions. And I think that's going to escalate. That naturally, Iran is the marginal producer in oil. That definitely is going to press us maybe into 80, 85. It doesn't even have to press us to 100. It presses to 80, 85. That's going to resonate all the way through the economic chain in terms of costs. So all of those things could really maybe a slow wait, but it's definitely going to be a wait going forward. And so much of everything is priced now to perfection that I think it's going to be hard to make forward progress.
Do you feel that there's a risk in this earnings cycle as we get into this latter part of January that the earnings guidance may actually play a role in this?
That's interesting. Yeah, I think that the earnings themselves are going to be stellar because the spreads are really good. The PPI went down. CPI, they still have pricing pressure, but I think they're going to see much more limited pricing pressure as already wages and everything else are starting to slow down a little bit. And so, yeah, it'll be interesting to see what the guidance is, going forward. I mean, demand. Don't get me wrong. Demand is still very, very strong and it's very robust, but I really feel like it's peaking. I mean, last time I was on the show and I said, we're coming out of pandemic, and I said this is going to be the greatest economy you've ever seen, and everybody thought I was a complete idiot. But I had a tremendous amount of sort of anecdotal data, right? Which everybody always laughs at because they think anecdotal data is not good data, but it's actually, when you're investing, I think it's much more of an art than a science, and it's much more valuable. So at that point, it was just spend, and I thought, oh wow, this is really going to soar, especially if oil prices come down. Now I'm actually seeing the exact opposite. I'm seeing like Mag 7s, right? Everybody's very complacent about Apple. I'll give you one anecdotal point from Apple, which is all I need to make my rash investment judgment, which is this. I'm on the west side of New York. The Upper West Side store used to be one of the most productive boxes Apple ever had. I think, at one point it was like doing something like, 100 million or 200 million a year. It was just really, really like basically you would walk by that store any time of day and night, and it was always mobbed, full of people, so on and so forth. Since pre-Christmas, from like, I think Thanksgiving to Christmas, and I walk by that store every single day, right? You could put a bowling ball through there. There were more Apple employees on the floor than there are customers.
Wow.
Now, yeah, I know it's one data point, and I know it's one store, but that is emblematic, I think, of the product. It's not that I own the 15. It's a great product, blah, blah, blah. But, who's excited about Apple anymore? It's topping out. And with the pressure in China and the fact that they really don't have a market in India because Indians are just not wealthy enough to buy their stuff. I think this is one of those, stories that can go from 3 trillion to 2 trillion, and nobody really appreciates that. So to me, that's one of those, unexpected events that could start, because, once people, it's all sentiment, right? Once people decide, oh, Apple is done, it doesn't really matter what the valuation is. It doesn't matter how much cash they have on hand. It's all about, price earnings compression, right? Just like Microsoft was making tons of money on the bomber, but price earnings compression made that stock die. Then all of a sudden, Satya comes on, price earnings expansion happens, and everybody, he looks like a genius. Like 90% of stocks is less about their growth and about their price earnings expansion compression. And I think you're going to see compression in that's going to really weigh on NAS.
Well, one of the things that really kind of flagged Apple for me was many of the other Mag 7s ripped to all-time new highs. And that was actually the environment from where Apple easily could have rebounded back to 190, 195, even double top retesting its previous highs. And during that entire rip, Apple barely bounced $10, not even $10, like $5, $6 on the upside. And then on the first breakdown today, it's right back down toward its lows from the other week. And so there was definitely a far kind of more distributive price action. But what do you make though?
Look at the Apple price action and look at actually, the S&P price action. It's pretty distributive, right?
Yeah.
I mean, if you sort of like pull back, but Apple is really distributive.
And so
NVIDIA is definitely a different story. NVIDIA, is going to the moon. It's I don't know. I can't make an intelligent assessment of just how pervasive AI will be. I love ChatGPT. Great. I used it like everybody else from the first 2 months, and now I haven't used it in a long time. It helps me code a little bit. I actually started using Bard, although Bard is just, still the most idiotic AI ever. But it's cheap and it's fast, so it's okay. But like, I don't know if it's not the kind of material change in our life that we all thought it would be instantaneously. Like, we don't have robots doing our dishes.
Yeah.
And it may be just like the flying cars, never happening in real life. So hard to determine just how much true economic impact AI will have. But for now, the narrative is in their favor. So we'll have to see.
So the interesting thing, though, is that we talked about it on previous Huddle sessions, and Kev has been kind of speculating on this idea that we would inevitably see rotation out of the Mag 7s and, let's say, go into some of the more defensive sectors, interest rate sensitive sectors. Who knows what other areas of the market in a rotation? But these Mag 7s continue to be the leadership, even though Apple is divergent from them. How long does this kind of trend where the Mag 7s are still the leadership continue? Do you think that in your thesis, where you're saying that the markets are going to peak out here, do you think the Mag 7 will kind of be what leads the way to the downside, or is it going to be a far broader sell-off? Any speculation on this?
I think it's going to be a broader sell-off, and and Mag 7s are everybody lumps them together, but they're really different stories. I mean, Tesla is very different from Nvidia, and Microsoft's business is far healthier in many ways than Apple's business. It goes back to the whole idea of it's a market of stocks, not a stock market, maybe. And it'll just be. Mag 7 will just fracture a little bit. So yeah. I think it's, I don't know if it's going to be a uniform move just because it was a uniform move to the upside doesn't mean it's going to be a uniform move to the downside.
Right.
I do think they're all very different businesses, and they are all going to face, very different idiosyncratic stories going forward.
Now, you were let's kind of talk about some of the intraday stuff, because you get into the granular intraday moves in your business, and so you were observing some patterns that in intraday volatility. What have you been seeing?
Well, since the start of the year. So first of all, I'm a degenerate trader. Let's just, put it that way.
At least you can admit it. I mean, most people have a hard time admitting it, but you can admit it.
So I'm watching the market tick by tick all day long, every day, from 4 a.m. in the morning. So the thing that, you constantly saw in the bull phase, in November phase, early December phase, is that last hour was always it was just like rip it till about 3:30 in the afternoon. There was always flows coming in, really, really supporting the moves, right? And the thing that's happened since the beginning of the year isn't, it's not like that we're selling off. There was a couple of days where I had sell-offs, but it's just that we're dead. Like, this reminds me of like the 2015 markets. Like literally we're on life support. Like, the volatility in the last hour, which is supposed to be the smart hour, which is supposed to be when all the institutions are going to be laying down their positions for the next day or squaring up, for the next couple of days, there's no flow. So where's the flow? When there's no flow, that always worries me, because that tells me, okay, that means, people are just really not that interested. And once they lose interest, it's like it's the start of the bad times.
Right. Let's move on. I want to talk about currencies because you do a lot of Forex, and let's start with talking about the Dixie. And what was interesting, obviously, during this entire risk-on impulse that started in November, has been a pretty sustained distribution cycle in the dollar. We saw almost 7 handles of the dollar index drop in that time, but really it was on Powell's pivot to a pause over a month ago that really started the final leg down, where from like the 104 level, we got down under 101 temporarily on the dollar. But what's interesting about particularly today's breakout, it's on the Tuesday on the 16th, was that we almost have reversed the entire Powell pivot. And somehow the dollar has just gone showing strength, which is typical, and often associated on an intermarket basis with periods that are risk off. Do you think the dollar is telling us something here? And what do you make of this reversal in the dollar?
It sure looks like it, but it was also grossly oversold. So now, natural, it could be a combination of that plus squeeze, which happens quite a lot. So it's hard to say definitively, yes, this is a pure risk off trade. And we could just muddle on through. I mean, honestly, Patrick, this looks to me, it could be rangy for quite a while where we're just doing nothing.
Mm-hmm.
As everybody twiddles their thumbs and tries to figure out what the next move is. And I think, that's the thing. We'll know the next move when it hits, the news wires, but it'll be something unexpected that I think will be the result. Until then, what seems like what I think is happening is that we're just getting, a frustrating market for both bulls and bears. We're going to get like range compression and just, going back and forth. There was definitely some risk off flows today. There's no doubt about it, but we haven't seen, we certainly haven't seen the 3% day in equity. We haven't seen any kind of, really puke jobs, that, mark true risk off waves yet. So we'll have to see if this is a precursor to it.
I really, I just find that when you have such a major news event such as the Powell pivot, start a trend move, the fact that we're almost trading right back to the levels before the announcement, it was really based upon this idea that the U.S. was going to be more dovish than other countries, and therefore, that would impact the dollar. It's just it's a bit of a surprise. I'm still trying to size it up myself. But what is interesting, though, Boris, was the move in the U.S. dollar yen, which is really like it's been that very traditional, that November to and December months were very weak on US dollar everywhere. All the cross currencies were ripping, and this was no different. But we've more than 50% retrace now the entire cycle, and it really looks like that US dollar is gaining momentum against the yen. Does this scenario in any way different than your overall view of the dollar?
Yeah, I think dollar yen is a double top. I mean, if we may go to 52, 53, but we're kind of a double top there. I think the yen wave is distributing to making, fresh lows. We're actually bullish yen for the year. I'm not, I'm trading equities. My partner Kathy really trades FX, and she's sort of the pro on this, and she's calling for a stronger yen for a whole bunch. I mean, economically, Japan is doing much better. There is for the first time in maybe 20, 30 years, they're actually seeing a modicum of inflation. There's going to be yield rate compression between the dollar and the yen. So I think you're going to see the yen strengthen a little bit here. And all of these moves are just counter trend moves. So we're selling the rallies. We would not be buying them.
All right. Well, listen, Kev is not on this interview, so we can talk about the asset that shall not be named. We can talk a little Bitcoin. Yes. Now, it was interesting because it's been an extraordinary bull phase in the crypto going back to September. Very quiet, 100% advance in Bitcoin from the October lows. But what's interesting is a lot of the talk was about the inevitable release of these ETFs and the subsequent flows that would come from it. And often
the exact opposite happened.
Yeah, and often what ends up happening, like in geopolitics or anything, it's the buy rumor, sell news. So obviously a very distinct reversal off the high. Does this in any way mark a top for you, or what's your thinking on Bitcoin, and what levels are you watching?
Bullish. It's actually super bullish. I mean, again, I'm not a Bitcoin maximalist, not even close. I could care less about it. But I think, again, I listen to people who I trust in this space who tell me, basically, first of all, that if you sort of look at all the ETF assets like gold and everything else, that's a very common pattern where, the asset gets ETF'd, everybody thinks it's going to be a huge move. It's actually a sell the news event, and then it slowly builds volume and interest and starts to grow. So I think it would have been much worse if Bitcoin went to 50 off the stuff, because that could have been a blow off top. The fact that it's sold off is actually very constructive. Probably comes down maybe, some of the guys I talk to technically say it's likely come down to maybe 37, 35. And then, starts to build the second phase. Both gold and Bitcoin, in my opinion, I mean, Bitcoin is obviously also a risk on asset, right? So you could say that, but I think for the first time ever, for anybody who's not a complete gearhead, Bitcoin could be a viable, fiat distribution, fiat, alternative asset. It's because now, ironically enough, Bitcoin becomes valuable when you de-digitize it as an ETF, when you securitize it, because now everybody can buy it. And I think what you're going to see, I think where this story could really starts to really take off is if we start to see the sovereign debt stress. So, failed auctions or problematic auctions, us running a ever increasing deficit with a shortfall in tax revenues, anything that creates stress on the fiscal budget side, I think that will finally start to really resonate as people go, fiat is going down to zero, so we all got to be long gold, long Bitcoin. And I think that's when you're going to start to really see the asset perform well on a fundamental basis. But for now, the technical move was actually super positive, and unless it kind of breaks below 35,000, the people I talk to tell me that it's much more of a buy than a sell at this point.
All right, Boris. Now, you love to pull out the Nancy Pelosi jokes, and so let's talk about Nancy's stellar trading performance.
Everybody saw the leaderboard of the House, right? It just came out, I think, like a week ago. She was again at one of the top leaderboards. But the thing that I love about it is that everybody always screams about how it's all manipulated and it's horrible that members of Congress get to insider trade, blah blah blah, so on and so forth. The irony of the whole thing is that any Joe Schmo off the street could actually mimic Nancy Pelosi's strategy, which is incredibly smart, which is basically substituting holding equities into holding leaps. All she's doing is doing quite a lot of long-term option holding, just to straight up calls. And I would make the argument that you could make this a much better strategy if you simply did leap call spreads, right? Most of these positions, let's say, I don't know, you're bullish NVIDIA, right? You could be long the 450s, short the 500s. Maybe, I don't know, cost you 20 to make 50. Those are great odds. A year forward, maybe even 14 months forward, because if you're right, it's going to pay out. If you're wrong, it's a stub. It's a stub of a loss versus the position that you have in the underlying with much lower capital holds. I think this is where everybody likes to trade zero DTEs, but the real money is actually made on the leaps. And I think that's the lesson out of Nancy Pelosi that you can take away, whether you're Republican, Democrat, Independent, or just anybody else.
It's funny because that's something that we commonly do, and I just did a gold presentation talking about how to use these kind of long-term options to position on bullion. So definitely kudos to Nancy. I love that strategy, and it's something that listeners can definitely leverage.
Right. And from a simple, point of view, if you're using call spreads, you eliminate not all, I know the Greeks, but you're not eliminating all, but almost all of the Greeks inside of the option. So you don't have to worry about volatility and gamma and delta positioning and rho. It's one offsets the other, and it's just a pure positional play. You're making a directional play on an asset with a limited risk and quite levered upside. I mean, what better way can you trade?
The only pushback on that is, of course, that those kind of spreads move incredibly slowly, and so you're gonna get a burst in the thing, and you're thinking that you're gonna make a shitload of money, but with that much time on a spread, you have to be patient because it's one of those things you're gonna have to hold deeper into the trade in order to finally see the end result. So you have to be patient with those trades, and that's
100%. But this is for people who are going to be. Nobody's buying in NVIDIA for a 5-day pop. I mean, that's not what it is. If you're an investor and you want to see what am I going to do for 2024, expressing your positions via leap call spreads might be a much more intelligent way than just simply going, all in hog wild into the underlying and then going, oh, how come I'm down 50% on my portfolio?
There you go. Love it. So, Boris, is there something that you still wanted to chat about that I forgot to ask you?
No, I think we covered everything in the world that we could at this point. It's just that I think the key takeaway is that I forgot who was the guy in Hollywood who was the big screenwriter. He said nobody knows nothing. I think that's sort of like the lesson. The older we get, I think the more humble we get in terms of trying to
Yeah,
call a lot of these turns. All we can do is just observe and speculate intelligently, and
absolutely.
I think that's the lesson for us all.
All right. Well, listen, Boris, for those listeners that are enjoying this, where can they follow you? Where can they find you?
So for as long as X lasts, and God knows how long that's going to be, that is the place I still hang my hat. You can follow me at FX Flow, and I'm happy to engage with you. Just you can call me an idiot so long as you give me a good reason for it. And I don't mind. It's fine. And of course, if you guys want to come hang out, it's actually BK Traders. We've expanded from BKForex to BK Traders. You can find me at bktraders.com. We have a free Discord also, so you can come in and chat with me over there. But that's the best place to find me. And if you want to just write me a note, it's Boris at bktraders.com. I'm happy to respond to any questions you guys may have. Otherwise, peace and love, and may all your trades be profitable this year.
Boris, thank you so much for joining us, and it's a pleasure to have you on, and hopefully we'll do this again in the months to come, buddy.
Will do. Thank you, man.
All right, thanks a lot. So thank you for tuning into the Market Huddle Plus. We'll be back next week with our regular scheduled full episode. So cheers, everyone.